How much money can you make monthly trading Forex? This is the topic I really want us to discuss this moment. This is a question that I always come across, especially from those that are new to the business of Forex trading. Unfortunately, they are mostly entrapped by the Forex trading fallacies from scammers. They fall into the hands of the people that merchandise incorrect reasonings to the newbies. Okay, they fall into the we have some people in this Forex trading arena or business who always market what they market is wrong philosophies, and then they make it captivating to the upcoming traders, and most of them unfortunately fall a victim to such. Now, back to what we're talking about. You must have heard of statements like, wow, I just made $10,000 today. Hooray, I made $20,000 last month. I make $500 every week, every day, every hour. These are the kind of statements you hear all over several websites. The problem with such statements is that nobody talks about the risk involved. The truth is that if a trader who has $1 million portfolio makes $10,000 in one trade, that is just 1% profit, and it is not a big deal. 10,000 is just 1% of 1 million, so that's not a big deal. But if you have $1,000 portfolio and you expect to make $10,000 in one trade, to me, I call that suicide. Or even in 1 month, turning $1,000 to $10,000 in 1 month is suicide, right? I have reasons for that, technical reasons. Okay, now I've just explained. I will just try and explain some things to you, and you understand better. The best way to know how much you can make in a month is to know how many pips you can make on the aggregate in 1 month. It's better to talk in terms of pips rather than talking about the money. Okay, for instance, let's say you win 800 pips in a month and you lose 500 pips in the same month. That means you have an aggregate of 800 minus 500, which is 300 pips. That means in that month you have actually made 300 pips. Okay, considering this example I just gave to you, where you net 300 pips in 1 month, assuming you start off with $2,000 account and trade 0.1 standard lot, which implies that you are trading $1 per pip. That means the value of your pip, of 1 pip, is $1. So, and you have made 300 pips in 1 month. If you multiply that, we are going to have $300. That's 300 pips times $1, because $1 is 1 pip is $1. So that gives you what? That gives you $300 in that 1 month. That is exactly equal to 15% of your capital, your 2,000, because 10% of 2,000 is 200, and 5% is 100. So you have made $300, which is 15% of $2,000. Okay, so that is not a bad performance for a new trader. In fact, it's not a bad performance for a professional trader. There will be months of larger profit, of course, but it is all a matter of time and pips. Right? Now, when you are looking at Forex for the first time, you see, most people might really, tune in when they see the sum of money that people are able to generate. They stumble across websites that have claims that traders made $10,000 in 1 single hour of trading. Someone without any knowledge of Forex, they think, to some people who lack knowledge of Forex trading, the basics, they may think that, wow, they can get rich in a matter of few days. But unfortunately, those types of claims oftentimes give a prospective trader the impression that Forex is a get-rich-quick scheme, right? It's not a quick fix. Forex is not a get-rich-quick scheme, right? It's the ultimate business and it is real. So we need a realistic approach to make the most from this arena. Now, in the world of Forex, it is my belief that traders, especially newbies, should develop a solid strategy right away that will allow them to generate PIBs. I cannot overemphasize this. I can never get tired of, stressing this. Keep generating PIBs and the money will come. You need to know very well that focusing alone on trying to make a lot of money right away without adequate mentoring or long-term experience behind you can lead to fatal loss of equity, fatal loss of capital. Why some might have what we often call beginner's luck. Maybe they turn their $500 to $5,000 and you say, wow, Forex is a very, very get rich quick scheme. No, that doesn't go for everybody. Okay, we call that beginner's luck. It happens to some people, but not to everybody. Now, so the question you should ask someone next time should be as sensible as the following. You ask them, number one, how many pips do you make per month? The question is important because you should not be fascinated by a sudden increase in profit that they show you. You know that most of the time, such change is usually and immediately followed by a sudden decrease as well. Therefore, you need to know the aggregate monthly profit in pips. Pips, I repeat. Now, the next question is, what is your trading lot size with respect to the size of your portfolio? This will help us to know if he is a sensible or a reckless trader. Trading one standard lot on a $1,000 account is nothing but reckless. Nothing but reckless. So on the contrary, trading such lots on a $100,000 could be wise. In fact, it's wisdom. So once you see the size of the lot involved, then you should know right away if the trader is actually a professional or a gambler. Now, the next question should be, what is your maximum drawdown in pips? What is your maximum drawdown in pips? Now, if we know the maximum drawdown in 1 month and the trading lot size for that month, then we can predict if the account will survive or crash. Here is the sense. If the maximum drawdown in pips in 1 month is like 400 pips, and I am trading $5 per pip, or I'm trading 0.5 standard lot, that would quickly mean that that would mean a loss of 400 pips times $5. That amounts to $2,000. Remember, I said I have an account size of $2,000. So if I have lost $2,000, definitely my account is gone. However, if I trade $1 per pip or 0.1 standard lot on such account of $2,000, then that will mean a drawdown of 400 pips times $1, which is $400. Definitely the account will survive by this approach, and I'll still make a profit of $300 at the end of the month. Now this is what I suggest for new traders. If you have account size of $2,000, make sure that your trading lot size of 0.05 lot, which means that is half of $1. That's 50 cents per pip. You should not trade more than 50 cents per pip for an account size of $2,000. Okay. Now, if you have $5,000 plus, then you can be trading 0.1 lot, which is $1 per pip on the average. Then if you have $10,000, then you can be trading 0.2 lot, which is like $2 per pip. Okay, and if you have $50,000 plus, then you can $50,000 plus, you can be trading 1 lot, which is $10 per pip. I'm talking of standard account. So this is a very good suggestion for new traders, and it will help you to be able to weather the storm. Okay, to survive no matter how You know that in as much as you are following a reasonable trading system, definitely you will always survive the storm if you are using this good money management, right? So I really think you enjoy this video. If you really want to make money from forex trading but do not have the required time, or you do not, or do you want to be making money when you are still learning? I trade for people, so I can trade forex account for you. Just that I'm going to charge 30% of the monthly profit. The amount required is flat, minimum of 1,000 US dollar. I cannot take less than that. It's not going to work if I'm taking less than that. So if you want to contact me, make sure you have at least 1,000 dollar in your account. Okay, honestly, I really thank you for watching my video, and I hope I've made your moment. I hope I've not in a way, offended you. Please kindly subscribe to my channel and share with your friends. I am here to be uploading new and very useful ideas as per forex trading that's going to uplift our performance. Honestly, I really thank you for your time and for watching this video. See you in my next video.